And good morning and welcome to the VSA Capital 5 Minute Morning Miner on a very cold and frosty Monday, January the 23rd. Paul, how are you? You at home and warm or?
Well, yes, I'm home and warm. It is a bright sunny day outside though, so nice to see it's not raining.
Yeah, the rain creates black ice. It wasn't sunny and warm, I can tell you, at 6 o'clock this morning as I got on my bike, but I took a few of the corners rather slowly. Anyway, let's move on to mining, which is what people want to hear about. What do you want to kick off with this morning, Paul?
Well, we've got some good news out from Andrada Mining. That's the outfit that has the US tin mine and lithium resources out there in northwest Namibia, AIM traded. They've increased the tin resources out there by including what they call the proximal pegmatites, which are other known mineralization that had been historically drilled with over 800 holes, but hadn't been included in current resources of the V1 and V2 pegmatite that the company has developed for current operations. So that adds another, in this case, inferred resources, 57 million tons, average grade of 0.13% tin. So that's 75,000 tons of tin metal that are now part of the resource inventory out at the U.S. District. And that makes it one of the very largest compliant resources of tin now in the world. And that doesn't include, of course, there is a byproduct tantalum out there that is produced along with the tin. And there is an awful lot of lithium in pegmatite spodumene yet to produce out there.
This is the old Afri tin, isn't it?
It sure is, yes.
But for those that are wondering by the new name, yeah, look, we've talked about it quite a lot. It's a really interesting situation, isn't it? But there we go. Right. What next, Paul?
Endeavour Mining, we have quarterly and full year statement out from the African multi-asset gold miner there in Africa, Endeavour Mining. 1.4 million ounces produced in the quarter at all-in sustaining cost of $928 an ounce. That was the top end of revised guidance that they had given, but it is also about 36,000 ounces less on a year-on-year basis, and their costs on that AISC basis are into the 900s now, and they were in the higher 800s previously. They have announced a dividend 41 cents a share, which brings the total for the year to 81 cents. The sales price for gold was $1,742 an ounce for the quarter, $1,792 for the ounce. And we're looking at production guidance for 2023, looking very much flat here, with a slight, just very minor change in the guidance range of ounces, and also in the same range, a little bit higher still on the all-in sustaining costs, into above 940 somewhere. Just to keep investors informed here, this does look like that Endeavour Mining is solidifying its place as the African producer to invest in, replacing Randgold, which of course merged in with Barrick a little while back. And I think that given these numbers, there just doesn't seem to be any growth in the profile for the next 12 months, which means that their share price should move as a proxy to the gold price at this point.
That gets a bit boring, but there again, it's also quite a good way of playing the gold price, as you say. Okay, there's a few other little itsy bitsy pieces out, aren't there? Any you want to comment on, Paul?
Yes, I do have to mention this Green Rock Mining statement out on the new resource estimate here for their Amitsoq Greenland graphite deposit. 3 times bigger now, and it's what really catches your eye on this one is it is 23 million tons in total resource now, and that's relatively small in volume, but this grade for this deposit at over 20% contained graphitic carbon means that it is an awfully rich deposit for this style of metamorphic mineralization. These kind of grades you normally see in what they call the vein-hosted style, which you see in Sri Lanka. But the bottom line is that very small mines end up making very high margins of profit, and this one certainly has that kind of a scenario possibility in front of it here. It is also in far southern Greenland, which is ice-free, which means that its development should play right into the European battery sector.
The European battery sector, and it's interesting there. Actually, of course, there's a lot of talk now. The EU want to have the subsidies for to compete against the Inflation Reduction Act, and now there's talk that the UK needs to do the same sort of thing. And I noticed also that Fortescue are saying that they think they're going to have more, create more profit or something out of green renewable energy or whatever than their mining operations. What do you think of that, Paul?
Yeah, Fortescue said that. The gal with the company said that in her speech at Davos late on Friday. We know that Twiggy Forrest has been investing rather heavily into the renewable space, and now we can see just the scale of what they're looking at as far as how the board of Fortescue is considering its importance to the ongoing company as well. So they definitely intend to be the major player, I would say, on a corporate level in Australia.
They would probably succeed as well. Very good, Paul. Thank you. Now, I will speak again tomorrow, and then I believe you're off to the States for your mother's funeral, yeah?
Yes, that's right.
Okay, speak tomorrow.
Mm-hmm.